So if you are self-employed or have a 1099 income, when does it make sense for you to actually make that election and move from self-employed Schedule C to being an S corporation and save on that self-employment tax? Well, that's what I'm going to go over and explain. At the end of the video, you'll have an understanding of when it is you might want to have that conversation, at least with your tax professional. Well, let's talk about why you even want to go to the S corporation. And the S corporation, if you haven't watched my last video, you can go ahead and watch that. But it's about saving on self-employment tax. That is the sole purpose of making that election and becoming a S corporation. So, if you don't have any self-employed income, or your income is not enough, or the self-employment tax you're going to pay is not enough to outweigh the additional costs, and I'll cover what those might be, then that's when you don't want to be an S corporation. You want to stay as a self-employed Schedule C if you don't have any self-employment tax, or you just have a small amount of self-employment tax that the savings you might be able to get out of S corporation is not worth it. So what is that amount then of SE tax that you're going to pay? Well, we're not going to get into calculating it. We're going to look at it in general terms a little bit broader, but let's discuss what the additional costs are going to be once you make that election, and what are the tax savings we need to be greater than in order to make it sense. Well, it's going to take an additional tax return. When you move to an S corporation, you will have a separate tax return for the business, separate from your personal tax return. When you're Schedule C, that's part of your 1040, and that's included in the personal tax return. The S corporation is a whole separate filing. You get a K1 from that S corporation, and that feeds into your personal tax return. So you're going to have the cost of somebody preparing a separate business tax return in addition to your personal tax return. There's also probably bookkeeping. You're going to want to have bookkeeping, or I think there's a higher standard of bookkeeping you need to have when you're an S corporation, because the tax return is more complex. You need a balance sheet in addition to your income statement, and you are a real business. You, at this point, you really need to have that bookkeeping up to date. You should have it beforehand, but maybe you're making that transition, you haven't really kept bookkeeping, you've done it on Excel, pieces of paper, just look through your bank account. You really need to have some sort of booking. So you're going to have at least some sort of software cost if you're going to use QuickBooks Online or something like that. And maybe you even want to hire an accountant to do the bookkeeping, or at least help you along with that bookkeeping. So that would be some additional costs you might need for the S corporation. Many people don't really think about the bookkeeping side, but it's really important once you make the S corporation to get your bookkeeping up a level for sure. And then the third cost is going to be your payroll. In order to be an S corporation, you have to pay yourself a reasonable wage, issue yourself a W-2, file payroll tax returns on a federal level and maybe even a state level. So you're going to need somebody to help you with that payroll as well. So you're going to have to hire a payroll company or somebody to help you do that filing for those payroll administrative costs. So those are all the costs that you're going to need. What that exact amount's going to be, it's going to vary depending on who you're using and what kind of level of service you're going to get from those individuals. But those are the type of costs you need to think about. What are those going to cost me when I make that conversion? And so that's the amount of tax savings I need to overcome that. What I tell my clients, and you'll see a lot of people out there, they'll put net income numbers of $40,000, $50,000 you need to be over. I like to look at it at gross income level, because it's a lot easier. How much money are you collecting from customers, or how much money are you getting on your 1099 from income from the work you're doing? Once that reaches probably about that $75,000 mark, somewhere between there to 100,000 is when it usually starts mathematically to make sense. So that's when the conversation needs to happen with your tax preparer, or as you're approaching up to that. Not only do you want that level, but you want to know that you're going to bring in that consistent level over the future years. Because once you make this election, you cannot go back after, or not until about 5 years is when the IRS will let you do that and go switch back out of the S corporation. So you want to make sure your income is going to be consistently above that $75,000 mark. Then you can go have that conversation on your specific situation, understand your expenses as it relates to that income you're getting, and when it might make sense for you to do that. Now, you probably want to have that conversation as you're approaching those levels. But that's generally the level of income I like to see in a business or on a 1099 income coming in to be the bare minimum to really make it mathematically work in your favor for that S corporation. And that tax savings you're going to get is going to then outweigh your expenses on those tax returns, payroll, and maybe bookkeeping and other administrative costs as well. So it's an easier way to look at it than looking at your net income after expenses. A lot of people don't know really what their expenses are, but they certainly know what their income they're bringing in is. And so it's an easier way to know. Just kind of see halfway through the year, if you're about half that, you're making 40,000 plus midway through the year, then maybe we need to start looking into that and seeing what those costs are, interviewing tax professionals, things like that. That's the easy way to look at it. There's no hard line of, I don't think, what there is, because everybody's expenses as a percentage of their income is going to be different. It's going to depend on your industry, depends on your personal expenses, not your personal expenses, but what you spend personally in your business. Specifically for business purposes, do you have rent? Do you have employees? Things like that. It's going to make a big difference and can vary by person to person. So you might be lower. If you don't have a lot of expenses, you could even be lower than that amount. But I really like to see at least that 75,000 to start having that conversations. A lot of times we don't want to go make that move until we get to that $100,000 mark, but at least at that 75,000, we're making some decisions. We're making some plans up front with the tax professional to make sure we make that transition, make that election, become an S corporation as soon as it makes sense. I hope that's helpful. If you have any questions, go ahead and leave comments. And if you want some more content like this, go ahead and subscribe.